Hi to IPO subscribers. Welcome to eaglelive.ai. Today, let us review an SME IPO from DHANWEL Hybrid Seeds Limited. The issue opens on 19th and closes on 21st. Here we go on IPO review. So for any company, fundamentals of the company is very important. And in this case also, let us see what is the financial status of the company. So this is the financial analysis report generated by AI-powered software. And based on the metrics given to the software, this company has been categorized as a healthy company. Let us see what are the financial strengths that made the company a healthy company. So first you see health analysis. In health analysis, solvency first. Solvency ensures the sustainability of the company. The company can sustain or not. That is very, very important. Here, all the metrics under solvency are positive. So, solvency is strong. Coming to liquidity, liquidity ensures the survival of the company. Current ratio is 2.02, very good. And what you need is 1.33, and quick ratio is 0.68. See, when the current ratio is more than 1.33 and quick ratio is less than 1, it means that there is a high amount of inventory levels in the total current assets. That is the reason why quick ratio is 0.68. Otherwise, it's okay. So, health analysis, operational efficiency. So, inventory turnover is 3.60. In general, should be 8 to 10. And the gross margin 18.23. In general, we expect 50%. But of course, for all the companies, it will not be the same. Depending on the industry, it will vary. And coming to financial irregularities, that's financial frauds. No financial frauds have been identified. And the profitability, EBITDA is 9.27, EBIT is 8.8, gross PBT is 8.33, PAT is 6.12, cash profit 6.5 crore, EPS is 9.56, EBITDA margin is 12.43. In general, we expect 20%. Net profit margin 8.2, expect more than 10%. ROC is 49.36, very good. ROE is 37.15, very good. And the return on investment, of course, it is not given in the financials. And book value per share is 30.69, very good, good value. So cash flow from operation activity is minus 2.49. Coming to net cash flows, it's again minus 3.1 crore. There is a negative cash flows were there. And market values, so this is a market price, 99 rupees is the market price. Sorry, cap price of the IPO. So based on the 90 rupees of cap price, the price earning ratio is coming at 10.35. Of course, it is within the benchmark level of 25. The appears that the promoters are giving a pitch earnings to the IPO subscribers, and price to book value is 3.22. It is just above the required ratio of 3. Should be in general to less than 3, 3.22. And let us see the projected the PB based on the CAGR, and then we can have a final decision. And coming to growth point of view, sales growth is 69, and PBT growth 148.67, PAT growth is 183.46, EPS growth is 71.09. All are positive, very good. And coming to sustained growth also 183.46, very good. So this is the all the metrics in the growth indicators are positive. Very good. This is the financial analysis of the company. So now let us go on IPO review. Here is the IPO review of DHANWEL Hybrid Seeds Limited. So business overview. DHANWEL Hybrid Seeds operates across the seed value chain, seed development, multiplication, processing, distribution. Uses contract farming with technical support from agronomists. Product exposure across paddy, wheat, maize, cotton, and oil seeds. Benefits from long-term trends of higher farm productivity and hybrid seed adoption. Sector opportunity is attractive, but earnings remain exposed to monsoon, climate, and agriculture cycles. So IPO money, where it is going? 26.73 crore is the fresh issue. 7.6 crores is the debt repayment. 11.6 is the working capital goods. And the balance is general corporate purpose. IPO proceeds are mainly for balance sheet strengthening and operational requirements rather than major capacity expansion. Valuation, key highlights, PE 10.35, PB 3.22, and EPS is 9.56. Now let us see the valuation. The valuation, why a valuation looks attractive. 10.35 PE provides a reasonable valuation comfort, and based on these stated growth assumptions, projected PE falls to around 6.24. Very good. Projected PB could decline to 2.89. Very good. Recent earnings growth has been strong. Good. But do not extrapolate 66% CGR indefinitely. The forward valuation looks attractive only if the company can sustain a substantial portion of its recent growth. Valuation verdict reasonable, attractive. At 99, valuation is not aggressive for high growth SME, but governance and cash flow risks demand caution. So financial and business positive. Financial and business positive. Strong recent earnings growth, reasonable anti-valuation, debt repayment through IPO proceeds, working capital support, exposure to structurally growing and industry, seed industry, and the promoter holdings remains 36.111%. It's a very low percentage, and here it is a little bit a concern. One should think of that. And coming to the key red flags, historical negative operating investing cash flows, high working capital requirement, weather and monsoon dependency, and contract forming execution risk, related party transactions concern, statutory filing and corporate record deficiencies, and no external appraisal of IPO fund utilization. So, this is a basic problem with the CP. See, the fund requirement fund must have any IPO must be appraised by any financial institution or bank. Then only investor can have good confidence on the fund what they raise. It is at their discretion, then you can imagine what for the fund is going to be used. So coming to market sentiment, important. QAB allocation is only 1.06. It's a highly concerned one. So QAB participation is very low. Retail 46.93, NII 46.93, market maker 5.06. The issue is therefore largely dependent on retail and HNI participation. Low institutional participation reduces the confidence signal normally provided by QAB demand. Market sentiment, a mixed cautious, positive, attractive valuation, positive, attractive valuation plus strong recent growth in negative is very low QAB participation plus governance concern and SME risks. Investment view, DHANWEL hybrid seed limited combines an attractive industry opportunity with a relatively reasonable IPO valuation. However, valuation is not the only consideration. Governance issues, historical negative cash flows, climate dependency, and negligible QAB participation increases the risk profile. Final view, may subscribe with caution. So best suited for aggressive investors comfortable with SME IPO, volatility and agricultural sector risks. Key investor question, attractive valuation, but our governance and cash flow risks are worth taking. As always, investment decision should be based on your own financial goals and risk tolerance. Thank you for watching. Thank you very much. If you found this analysis useful, please like the video, subscribe to the channel, and stay connected for more detailed IPO and stock market research. Thank you very much.